Hi, folks. I'm Sandy Botkin, and I want to tell you how honored I am to be here. I've written articles for just about every network marketing magazine in the country, and I can tell you a lot of companies don't really care about helping their people maximize their financial gain from their business by giving them the business tools necessary to be successful. But I got to tell you that with them doing this here, I'm very glad to be part of this, and I think you should be as glad. First of all, let me give you a 1-minute overview of what we're going to be talking about. FHTM is like a business in a box or a franchise. It gives you access to many great products, inventory, marketing, but without the big upfront investment that you might see in a traditional business or franchise. The key to running any business, though, in fact, this is the key to all financial decisions, is known as ROI, otherwise known as return on investment. Now, obviously, FHTM, your only upfront investment is your minimum monthly point purchases. My job, foremost, is to greatly enhance your opportunity in several ways. Number one, by making you fully IRS and Canada Revenue Agency compliant so that the government is actually on your side. In fact, there's a special update coming for you Canadians that you're going to like that I'll tell you about later. Number two, by generating enough deductions so that your monthly cost can potentially and essentially be reduced to zero as a result of the new deductions that will become available to you by being tax compliant. Think about that. One product to basically pay for your whole monthly purchases. Three, by giving you tools that are so easy and simple that you can achieve all of this in less than 2 minutes a day, and I'm not kidding. And finally, we're going to show you some tools that will greatly enhance both your recruiting and reduce attrition at the same time. Okay? All right, let's get started. And I do want to emphasize that what we're going to be saying, just with the tax benefits alone, can potentially pay for your monthly point purchases with those tax savings. And by the way, one thing about deductions are like getting a grant. You never have to pay them back to the government. So let's get started, and I'll give you a little bit about my credentials. By the way, one thing I want to emphasize here, I've been working on this for 10 years. There's been a lot of thought on this. And what we did, we combined a fusion, and this is what I wanted to do, of tools and education, all in one place. So you can basically be audit-proof for the rest of your life, and we'll show you exactly how that works. And my goal is to give you the maximum benefits with the minimum amount of time. I think you'll like that. First of all, a little bit about my credentials. I'm going to go through this quickly. I'm a CPA. I'm a tax attorney. Some of you may have heard of me, but you may or may not know of me. I'm a trainer for IRS agents nationwide, and I've trained a lot of the agents in the corporate tax division, a lot of the lawyers. I'm president of the Tax Reduction Institute. I've been this way for over 30 years, giving seminars to literally millions of people. I'm a featured tax coach with Donald Trump at the Tony Robbins Wealth Seminars. I'm a best-selling author. I'm an author of the book called Lower Your Taxes Big Time, and I have a new financial book that's coming out in a few months. And I've been a guest expert on a lot of media and different types of things. You know, one question I ask people at my seminars is, where does your money go? And believe it or not, they're not sure. Let me show you exactly what studies have shown. Somewhere between 18 to 40% of what you make for most people goes out in debt. Now, debt usually imply all debt, mortgage debt, education loans, personal loans, consumer loans. I'm talking everything. In addition, there's a day called Taxpayer Freedom Day, which is the day that you have to work to pay off your federal, state, Social Security, CPP, and so on. You know what day that is? I had someone in one of my seminars thought it was December 28th. It's actually April 19th. Now, this varies based on your income and based on the state you're in or the province you're in, but it's generally around 30% of what you make goes out in taxes. And it could be as high as 45%, but it averages 30 for your typical representative. Well, 30% goes out in taxes, and somewhere between, let's say, 20 to 40% goes out in debt service of some type. That leaves you approximately 50% of what you make with everything else, to pay for everything else, such as repairs, insurance, medical, retirement for you, education for your family, food, if you're renting a place, rent, all of those things. In case you wonder why you can't get ahead, well, if you have to live on 50% of what's left, this is why. You know, my question to you, it's a very interesting question. If you know, with tax savings, you have an earlier retirement. And there was a big study done that I want to share with you before I get into this. And the study was done by Harvard. And they wanted to know what percentage of people at age 65 can retire with the same standard of living they had before retirement. And the answer really was shocking. The answer was 4% of all people in North America can retire with the same standard of living. So what about the other 96%? They've got to reduce their standard of living, live on some form of charity, or keep working. You might have read about how older workers are working. I was just reading an article in the post office. They have 3 people who are aged 98 still working, and this is the reason. How would you like to be able to make almost every representative who comes with you in the top 4%? Because that's what we can achieve with Taxbot. And here's the question I want to ask you. It's an interesting question. Would you rather get a $17,000 raise every year for the next 10 years? Or would you rather save $10,000 in taxes, all taxes, for the next 10 years? If you said $17,000, believe it or not, you'd be wrong. Because by the time you pay federal tax, state, provincial tax, CPP, Social Security, things like that, you're left with less than $10,000. Tax knowledge is the most effective thing you can probably do in life. You know, most people don't realize this, but the amount of taxes they pay exceed what they pay for food, clothing, lodging, and transportation combined. So the bottom line is that a smarter taxpayer is definitely a wealthier taxpayer.
And this slide shows something very interesting. If you start off with $1, and let's say your equity doubles every year without paying taxes. So $1 at the end of the first year is worth $2. $2 at the end of the second year is worth $4. Well, if you run the numbers, you'll find it takes 20 years, but you would become a millionaire. You'd be worth $1,048,576 by having your money double every year. Now watch this. Same dollar starting off, same doubling every year, but now you're going to pay 35% of what you earn in taxes. And when you consider federal tax, state, provincial, Social Security, 35% isn't high. So a dollar doubled is not $2, it's $1.65. Now, same 20 years, but take a guess how much you think that's worth, because you're going to be very surprised when I show you. It's worth $22,370. I didn't make this up, by the way. This is exactly what it is.
Now, you might wonder, why is there such a huge difference? And here's the answer. Compounding. You're losing the interest on the money. You know, Albert Einstein is attributed with saying that compound interest is the 8th wonder of the world. It can work for you, or it can work against you by overpaying your taxes. You know, one thing that every major accountant will tell you, every major financial planner will tell you, and that's this. It's never been how much money you make, it's how much money you keep. It's always been that way. Let me ask you a question. Do you get a rebate card? Like maybe it gives you 1%, 2%, maybe you're lucky, you might have a 5% rebate card. What if you had a 45% cash back card? Seriously. If you had a card like this, and this works on almost everything you buy and almost everything you do, if you had a card like this, would you use it? Of course you would. I mean, you'd be stupid not to, right? I think we can agree with that. Well, here's the good news. You have that card today. It's called your business card. Because if you are in business, you can take deductions equal to somewhere between 20 and 45% on almost everything you can justify as a business expense. That's the key. And to give you an idea of some of the things you can take, you can deduct literally most of your meals and entertainment. How would you like to deduct most of your vehicle usage? Not just one car, but 2 cars, 3, 4 cars. How to deduct a home office. A lot of people don't realize how valuable this is, and we're going to get into that a little bit. How to deduct the equivalent of your kids' college education and weddings. I'm not kidding when I say that. Deducting medical expenses like braces as a business expense. No threshold, as a business expense. How would you like to do that? Deducting all your travel anywhere in the world. You know, one great thing that I like about FHTM is the fact that you can get customers, you can get representatives virtually anywhere. You're not limited to your home state, which is unlike me, as a CPA, for example, who can only practice generally in Florida. Income shifting, and much, much more. In order to do this, though, you've got to meet certain rules, kind of like a code of conduct. Number one, what the government wants you to do is to run your business like a business, which means you're trying to make money. You do things that business people do. They want you to document your activities correctly in a tax tracker or a tax diary, which is what we provide, and they want you just simply to pursue a profit. In fact, what most people don't realize is that we have some great tax laws for small business. And the reason for that is that small business generates over 75% of the job growth in North America. It's not IBM, it's not Microsoft, it's small business. So if you're an employee, you're taxed on $1. You don't get a lot of benefits. But if you're a small business owner, you can deduct part of your house, your spouse, the equivalent of your kids' education and weddings. And I'm not kidding when I say that, by the way. You can set up a pension plan that I promise you makes any government plan look small by comparison. The benefits are enormous. You know, I make the statement, a lot of times people chuckle a lot, but the government is really the biggest bookie in North America. Why? Because they're betting on you to be successful so that they can get paid. And the way the bookie works is this. Let's assume you start your FHTM business. You get a brand new representative, and that business generates a loss in the first year. And that sometimes happens. In fact, many times it happens. That loss can be used in both US and Canada against any form of income you have. Interest, dividends, wages, rents, pensions, anything. So let's take an example. Let's say you make $50,000 a year in a job, or one of your representatives does this, and now your FHTM brand new business generates a $10,000 tax loss. They only pay taxes on 40, the net. Let's say that loss exceeds the whole income for the year. The representative is a single parent and it exceeds their whole income. You can carry back all business losses in the US 2 years. For you Canadians, by the way, it's a 3-year carryback. So you actually can carry back these deductions from the taxes that you paid in prior years. You actually get a check. Or you can carry forward all business losses up to 20 years in both US and Canada. You can offset the next 20 years of earnings, so you never lose a properly documented business deduction. Now, I don't know if you ever heard that you have to have a profit, or you have to have a profit 3 out of 5 years. That is not true. In both US and Canada, all the government wants you to do, like any other bookie, is to work your business like a business with a reasonable expectation of profit, which means try to make money, have the right documentation, generate reports, and so on. And I have a whole discussion on this in Taxbot, by the way, and what you need to do. By the way, I want to emphasize a couple things here. I'm going to be giving you a 30,000-foot overview of what's in Taxbot. So I'm going to be going fairly quickly. And this will be taped, so you can replay it. And a lot of this information is in Taxbot, so I just want to mention that. There's a couple cash drain myths that I want to share with you. First tax drain myth. By the way, one thing I also want to mention about deductions. Deductions are cash flow which you never have to pay back. I want you to think about that. It's after-tax money. Cash drain myth number 1. What's the difference in tax benefits for a brick-and-mortar business versus a home-based business? And here's your answer. None. They're treated exactly the same by the IRS. Home-based business can set up just about the same fringe benefits. They get the same benefits as an IBM executive. Here's another question. What happens if you operate your business part-time instead of full-time? How does that change in the tax benefits? Answer, none. You get the same benefits whether you work your home-based business full-time or part-time. It doesn't matter. Cash drain myth number 2 is only 7 words long, and yet it is probably causes more people to lose money in North America than any financial mistake I could think of. And those 7 words are, my accountant takes care of my taxes. I have a similar myth. My spouse takes care of my taxes. If you learn anything, learn this. I equate that with a doctor taking care of our body. Wouldn't it be great if we could eat all the cholesterol and all the fattening foods, and then once a year we go into a doctor's office and we get one of these Roto-Rooter jobs? Another big myth, my mechanic takes care of my car. Those of you who have ever owned an older Jaguar would appreciate that myth. By the way, Jaguars are the only cars that have more vertical mileage than horizontal. What do you think about that one? Here's another myth. I gave a seminar, and somebody came up to me and said, Mr. Botkin, I loved your seminar. You had all kinds of great, good content. There's only one problem. I already get a tax refund every year, so I must be doing something right, right? He didn't realize he was getting back his own money. How sad is that? In fact, here's a very sobering statistic that I have found in one of the big magazines. Over 84% of small business owners overpay their taxes by an estimated, get this, $150 billion a year. That's B with a billion. And even worse, 90% of them didn't think they overpaid their taxes. That's even more startling. Now, why is this? The answer is a couple of reasons. Lack of education and lack of tools. I'll give you a couple of examples. Paperwork, doing the documentation tends to be very time consuming, and it involves a lot of extra paperwork. You have to write things down in a tax diary. And for many years, that's what I was recommending, because that's what the government wanted you to do. Procrastination is probably the biggest killer among representatives and small business owners in the country. A lot of times you'll say, okay, I'll do it. I'll do it at the end of the week. You don't do it, and what happens? Nothing. If you don't have like a little birdie who's kind of whispering to you to do this every day, what happens? You don't do it, and it causes loss of thousands, literally. Another big one, lost and faded receipts. I remember going to a seminar, and I put all my receipts in my jacket, and then I dry cleaned my coat. What do you think happened to those? But now, where they're coming out with receipt paper that fades. I'm sure many of you have seen that. So that's a real problem. Mileage logs are a pain in the neck. You know, you got to fill out your trip, where you went every day, and the business purpose for the trip every time you do this. And, you know, having to do this every day is a big pain. And finally, people don't know the rules. If you know, you don't know what you don't know. And if you don't know the rules, you tend to be scared of an audit. So what happens? You tend to take less in deductions. You tend to be more conservative, which causes loss of thousands. Sound familiar? We're going to be talking about education and tools. And the first part is the education. And in our program, in Taxbot, you get on-demand education for your team. So they can save literally thousands of dollars every year. And this is over 80 tips online, which is about 3 to 5 minutes. You can listen to each tip. It's both for Canadians and Americans, and we are always adding more tips. And not just financial tips, by the way. We're also adding tax, financial, and tax tips, both. You get both. You'll find it's a lot of information in there. Now, one thing I want to emphasize, you should never, and I'm going to say this to all representatives, give out tax advice to anyone, unless you're an accountant or an attorney. So my point is, let us do it for you. Let me give you some examples of some of the online tax tips that you're going to be getting. And again, I want to emphasize, this is a 30,000-foot overview of what's available in Taxbot. Strategy 1. Let me ask you a question. Who are your prospects? Are your best friends prospects? How about your adult family members? Are they prospects? How about your next-door neighbor? I've never met two representatives or two network marketing professionals get together and not talk business. So let me ask you a question that really got me started in the business. And I asked the former IRS chief counsel this. If everyone is a prospect, how can you ever have a non-deductible lunch with someone? You can't. And if you're not writing off almost every meal you have with someone, other than maybe your spouse, I'd like to suggest that you're losing thousands. And that's the important point. Everyone becomes a prospect. So almost every meal that you have to take with people becomes deductible. And it's not just meals, too. You ever have fun with people? You ever go to the movies, plays? You can deduct up to 50% of your fun. That includes movies, plays, golf, season tickets, all these things, football tickets. If you know what you're doing, all of this becomes deductible. And that's 50% of your meal, as well as 50% of their meal, or 50% of your fun, as well as 50% of their fun. If, and here's what the rules say in both IRS and Canada, if you talk business within the same 24 hours as this fun, in other words, you talk business within the same 24-hour day as the fun, does that give you enough time? Let me give you an example. Let's assume I talk with Brittany and we're driving to a play and we talk business in the car and I had my intent to talk business with her. Is that talking business within the same 24-hour day? Yes. Let's say that Brittany and I go talk business and she says, Sandy, what do you say we go play golf? And I say, well, all right, you show me how to play, I'll go with you. Is that talking business within the same 24-hour day as the fun? Yes. Here's the problem. Who has the burden of proof of showing that we talk business during the same day? Does the IRS or Canada Revenue Agency, or do we? And the answer is we do. And how do we do this? From our tax diary or tax organizer. Here is an actual example of the paper tax diary that I developed many, many years ago, and I was one of the first people to do this. It has to show 6 things. And here are the 6 things. Who? In this case, I wrote Nick and Carol Hillman. These are real people, by the way. What was the entertainment? In this case, it was dinner, or it was lunch, or it was a business gift. What was this? Where? You'll notice it says Palm Restaurant, and then we went to the Ford's Theater to have fun. When? The date happens to be on the diary. It didn't show up here in the photograph, but you put down the date. Why? And here you have to be specific. Try to get referrals. Try to get a new representative. Talked about the income opportunity. Talked about tax savings, whatever. And I even wrote down the name. And finally, how much? $200. By putting these 6 things, you will never have to worry about an audit again because your records will be in perfect shape. You'll have that peace of mind of not having to worry about this. And by the way, I want to emphasize something here. How long does it take to do this? You can probably do this, I've found, somewhere between 20 and 30 seconds a day, typically. But writing it down might take a little longer, maybe a minute. No more than a minute a day to keep IRS away. Why do not most people don't do this? Many reasons. They didn't know, and procrastination. That's the problem. See, the problem is if you don't have the right records, IRS will hit you, and Canada will hit you with a jeopardy. First, you'll be in jeopardy of an audit, disallowing your deductions. You will disallow your, you won't be maximizing your deductions. You'll be scared you don't have the right records. You'll be hit with interest, and you'll be hit with a 75% civil fraud penalty in the U.S. In Canada, it's 50%. And by the way, people ask me, they say, Sandy, you mean to tell me that IRS and Canada Revenue Agency will believe everything I say in my tax organizer? Yep. Unless they can show fraud, they will believe everything you say in your tax tracker. Your tax tracker is your audit insurance against IRS or against Canada Revenue Agency. Knowledge is the premium for that policy. Together, you'll have that peace of mind of never having to worry about an audit again and generate thousands and thousands of dollars of extra deductions potentially. By the way, another big problem is lost or faded receipts. That's a big problem. You think about all those people in Katrina after the flood. They had to report all their income, and yet they couldn't take any deductions without receipts documenting what the deductions were. If they didn't have those receipts, that's too bad. They have to report their income and they get no deductions. This is a serious problem that has to be addressed. And a lot of times people think, well, what about credit card statements? Can I just use those monthly statements that I get? Won't they work? The problem is IRS agents and Canada Revenue Agencies love people who think like that. Because think again, you need more information than the credit card provides. And even worse, and this is going to sound a little scary, you may have read about this, in 2012, IRS is hiring 16,000 new agents. You may not be able to see this on the screen, but it's 16,000 new agents. They're putting in an extra $400 million budget to hire these agents. Canada is also hiring a lot more auditors. My question to you is, are your records ready? Does that sound scary? The good news is by the end of the webinar, you're going to have a lot more peace of mind that you can withstand an audit and a lot more cash in your pocket. All right, strategy 2, deducting vehicles. Imagine, if you don't write off all of your vehicles, I want to show you something. You are losing $1 every 2 miles you drive. I want you to think about that. Next time you drive to work, take $1 out, and every 2 miles, throw it out the window. Probably have a lot of people chasing you. Go another 2 miles, throw $1 out the window, because if you're not writing off your car, if you're not documenting your mileage correctly, that's what it's costing you. And my question to you is, how are you currently tracking your mileage? Are you using paper and pencil? Are you using the year-end guesstimating technique? How are you doing this? And I want to emphasize a couple things. There are 2 methods in both US and Canada for writing off your car. One is the IRS method, and the other is the actual method. Now, what is the actual? Let me start off what this is. First of all, this is where you take a percentage of your automobile, percentage of your gas, oil, insurance, wash, wax, depreciation, and so on. And you write those things off. So for example, let's assume you put on 40,000 miles for business. Your business mileage is 20,000 miles. Therefore, 50% of all these things become deductible. And I want you to notice something here. It's not based on the amount of days you drive the car for business or the amount of months you own the car. It's business mileage during the time you owned it to the total mileage. So let's say that last year you bought a brand new SUV from December 25th to December 31st. Your deductions for that SUV are based on the 6 days. So if you use it 90% for business during those 6 days, 90% of that year's gas, that would be deductible. 90% of the insurance, 90% of what you could depreciate that car for becomes deductible. It's all based on business mileage to total mileage. Now, let's talk about the IRS method or the Canada Revenue Agent method. In this case, generally it's better to use the IRS method. Here's the rule. When you drive over 22,000 business miles, and this is true for Canada too, by the way, over 22,000 business miles, and the cost of the vehicle is less than $19,000. That's when it's best to use their mileage approach. Now, what is the mileage approach? In the United States, IRS gives you in 2012 55.5 cents a mile for every mile you drive for business. So you have to keep a log to show what your business mileage was. You also get 23.5 cents a mile for medical and moving. A lot of people miss this. Every time you go to the doctor, every time you go to the dentist, if you move to a different city, you should be claiming 23.5 cents a mile. And here's another thing that's omitted a great deal. Charity. Any charitable work you do with your car is 14 cents a mile. So if you take your car for fundraising for your local religious organization or educational organization, that's 14 cents a mile. You should become a croupier for raising money for your charity. That's 14 cents a mile. You do a mission, 14 cents a mile. Now in Canada, you get on the first 5,000 kilometers, it's 52 cents a kilometer as the deduction for business kilometers, and anything above 5,000, you get 46 cents a kilometer. Let me give you a little tip on how you can do this. Let's say you drive 10,000 miles for business. At 55 cents a mile, you would claim in the U.S. $5,550. And I want to show you something. This is an important point. It makes no difference how old your car was. It made no difference whether you bought your car new or used. It made no difference how many miles you had on that car. IRS still gives you 55.5 cents a mile. Canada still gives you 52 cents. So obviously the cheaper the car, the better the deal. That should make common sense. Here's a nice big trip, nice big example that I use a lot. Let's say you want to do something personal. You want to take your kids to football games, tutoring, dance lessons, or you want to visit your mom, which is a personal trip. Good example, picture of the mom. Now, you ask yourself, do you have a client or some kind of business stop you can make nearby, maybe an opportunity meeting, or you have a representative who lives nearby, you want to visit and help them out. By doing that, you can write off a significant portion of that trip, even though you went to see your mom also. And by the way, this works if your mom just happens to live in Hawaii. If you put ads in the paper to meet potential distributors or to meet with distributors, that could make that trip deductible, even though you had some personal activities in Hawaii, like seeing your mother. One big deduction that a lot of people miss is the home office. And this is really a big deal. If you don't claim a home office, you are crazy. I ran the numbers, and I found that a home office deduction is worth, I'm not exaggerating, over $2,400 a year in cash. And that's not in deductions, that's in cash. And I based that on houses that cost $200,000. But let me give you an idea. Let's assume you use one bedroom exclusively for your business. And let's assume that bedroom is 1/8 of the total square feet of the house. So what does that mean? 1/8 of the utilities become deductible as business utilities. 1/8 of your interest becomes deductible as business interest. 1/8 of the taxes become deductible as a business tax. 1/8 of the depreciation can be taken on the house. A lot of times people say, what happens if I don't own my home? I rent. 1/8 of the rent in that case would become deductible. 1/8 of the maid service, 1/8 of the alarm service. By the way, for those of you in Canada, there's a little important thing here. If you take depreciation, normally in Canada, you don't have to pay tax on the sale of your home. But if you take depreciation, you will have to pay tax on the appreciation on that home. So you might want to think about not taking the depreciation, but taking everything else. That's a little tip for you Canadians. Now, how do you claim a home office? There are essentially 3 rules that you got to meet. Rule number 1 is you got to use an exclusive portion of your room for business. It doesn't have to be a whole room. People think it's got to be a whole house, a whole room. That's not true. It could be an exclusive portion of a room, as long as it's separately identifiable and separated from the other part of the room. Now, here's the point. How do you prove that you used an exclusive portion of room for business? That there were no cookbooks in the business bookshelf. There were no bridge books in the business bookshelf. Take a picture of the home office every year. Date the photograph, but do not put the photograph, do not attach the photograph with your tax return. You know, when I was at IRS, people sometimes send their photograph in with their tax return, and unfortunately, they were making certain undesirable hand and arm gestures. Yeah, the IRS doesn't always have a sense of humor. This is true with Canada Revenue Agency either. So you want to keep the photograph in case you get audited. Secondly, you want to show that you use your room regularly for business, and that means at least 45 minutes a day or more, 4 to 5 days per week. And this is where Taxbot really comes in handy, by the way. And finally, and by the way, it's much more important, I want to mention something, to use your home, work your business regularly than it is occasionally. So for example, it's much more important to put in 40 or 45 minutes a day, 4 to 5 days a week, than say once every 2 weeks for 8 hours. That's a very important point. Finally, you want to use your home as your principal place of business. Now, to use it as a principal place of business, you simply have to meet 2 tests. Test number 1 is you don't have another office where you do your significant administrative work. And test number 2, in other words, the business, the paperwork, is that you do the majority of your management or paperwork from your home office. So the bottom line, let's take a typical FHTM representative example. The administrative work is done probably from their home office, and they probably don't have another office where they do any administrative work or paperwork. So they probably are entitled to a legitimate home office deduction as long as they use an exclusive portion of that room for business regularly for that business. And virtually almost every FHTM rep could probably be eligible for a home office deduction. Now, I do want to mention that all people who sign up with Taxbot will get a free tutorial on the home office. We're actually going to send you out a guide on much more detail on this. Let me give you an example of how important this is. This is a really important example that you want to show your reps as well. Let's assume I'm a brand new FHTM rep. Here's what I found, what would generate for me. And I actually took 3 deductions that would actually benefit me. And there's more than 3. I just picked these 3. Most people have either a mortgage or they pay rent. And the mortgage includes interest and taxes. Well, let's assume you use that house 1/8 for business. Then 1/8 of the rent or 1/8 of the interest and taxes become deductible as a business expense. In this example, we're assuming they pay $2,500 a month in rent or $2,500 a month in interest and taxes. And as I said, if you've got a much more expensive home, it could be a lot more than this. But in that example, that's $312.50 a month. Secondly, I have assumed you drove 200 miles a month for your business. At 55.5 cents a mile, that's another $110 you put in your pocket. Meals. Well, you know, normally you go out with colleagues, right? You go out with friends. They're all prospects. If you talk about the business and you document it correctly, you can write off in both U.S. and Canada up to 50% of those meals, of that fun. Meals, let's assume $150 a month. That includes meals, going to the movies, miscellaneous eating out, and that's for a whole month, by the way. That's only $75. As you can tell, these are conservative numbers, by the way. Well, if you add up these three things, you add up the deduction for mortgage interest, the mileage, and the meals, that comes out to be $497.50. Now, that's in deductions in 1 month. In cash, the actual translates into cash, that's about $175 a month in cash. And that's for the first month alone. And this is only 3 deductions. There are many more deductions available to you. I just picked 3. That's why when I'm saying potentially, Taxbot alone can pay for the entire monthly purchase in points. That's not bad for a little product like this. Remember, I want to emphasize a couple things. We said this before. Over 84% of small business owners overpay their taxes by an estimated $150 billion a year. And yet 90% of them, over 90%, didn't think they overpay. And why? Just to remind you, time-consuming paperwork, extra paperwork, writing down things in a diary. You know, let's face it, you know, who wants to do lots of paperwork? Procrastination is probably the biggest killer of all. It really has gotten a lot of deductions lost, according to the IRS, in fact. Lost and faded receipts is a major problem. Mileage logs are a big pain in the neck. You don't know the rules and are scared of an audit. That all sounds familiar, right? Let me ask you a question. What if you had a robot that tracked your business mileage for you, instantly recorded all your deductions, automatically stored receipts, give you tax tips and strategies in easy-to-understand language, backed up all your deduction records in case of loss, audit-proofed your records with simple to-answer questions so you have that peace of mind of never having to worry about the government again, in fact, having the government on your side, motivate you to maximize your tax deductions instead of being conservative and losing them, prepare reports for your accountants so you don't have to, and help you grow your business, help recruiting, and reduce attrition. Okay? In other words, it saves you thousands of dollars a month. Guess what? Well, that's what the Taxbot does. It works on the iPhone, the Android, the Droid tablet, all those things, and the web. It'll produce potentially 50, at least 10 times over what you pay. I can tell you that right now, and usually it averages a lot more. Let me introduce you to one-touch tax relief. First of all, Taxbot provides records that are documented fully in accordance with IRS and Canada Revenue Agent standards to ensure bulletproof audit. I've been working on this for 10 years. Typically, you can do all of this in I'd say between 10 and 30 seconds for the whole day. And the way Taxbot works is you press Add Expense. It'll reduce your business taxes by thousands of dollars. It will simplify your record keeping, by the way. It will safely bulletproof yourself against an IRS audit and give you the freedom that you need, more time to do what you need to do. And as I mentioned, you press Add Expense and then ask you for receipts. You snap the photo of the receipts. It'll take simple questions. These receipts will be attached. This photo will be attached to your documentation, and it will bulletproof you against an IRS audit and Canada Revenue Agent audit. And the way these questions work is that automatically, when you press Add Receipt, Add Expense, you'll ask you what kind of expense. You'll click dinner, for example. Automatically, it'll put in meals. The appointment, you would type in. That's a business purpose. Total, how much did you spend? Where? I went to Outback Steakhouse or Greasy Lloyd's. What was the name of that place? The date is already input into Taxbot. Who? You put in their name, and now you are bulletproof. It'll then ask you to attach your receipt. You press Attach Receipt. You take a picture of it. It will be stored on the web, and you can typically do this in 20 to 30 seconds. That's part of Taxbot. The second part is we have a fabulous mileage tracker with a GPS system, all integrated. So the way this works is you click on add, and these are actual pictures of my iPhone, by the way. You click on add mileage or start mileage tracking. See where it says start mileage tracking? You could do this manually if you want, but you click on start mileage tracking. Automatically, you will see a pin. You'll see that red pin. It will keep track of where you're going. Now, when you get to your location, you can either click stop mileage tracking, or here's something, a nice feature. If you're going to do multiple stops, let's say you're going to go see multiple representatives, you click lap, and that will automatically take a picture of where you are and what your mileage was and keep Taxbot working until you go on your next stop. Then the third screen will come up. It'll ask for a description. You type in sales call with John Drow or seeing representative, and it will automatically input the starting address and the ending address. I want you to see that, and the date. You then click save, and it's all stored in the web. And by the way, there's something very important that I want to point out to you.
There was a study done by the MMIA which shows that if new representatives get a minimum of $300 in cash per month, they will never quit. Now, I want you to notice something here about Taxbot, because this shows exactly on the front of Taxbot how much you're saving in deductions each month.
In this example, for example, as of January 28th, my iPhone, I'm generating $1,074 in deductions as of January 28th. My question to you, you think a rep is going to leave knowing that they're generating $1,074 in deductions? They can't afford to quit. That's the point. It will definitely improve retention, I'll tell you that. Can you see that? It will also eliminate paperwork and save you loads of time. All the information is secured in a web portal. But I'm talking receipts, mileage, expenses. This is all secured in a dynamic web portal that you can access 24/7 anywhere with internet. So this is going to integrate with your current record keeping and appointment tools. You can use this for budgeting. By the way, I want to emphasize something here. You know, I don't know if you own a BMW or a Mercedes. These are very fine cars, but a lot of people don't realize how good they are until they look under the hood. It doesn't always seem that way when you first look at them. Taxbot is the same way. I've worked on this for 10 years. Every aspect of this is like a Cadillac. Everything is well built and very thorough. For example, this web, we store things on the web. Now, there's a lot of companies that will tell you they store things on the web. And they'll even tell you, oh, we have backups. I guarantee you they don't have backups like we do. What we've done is when you store an expense or your mileage, we back it up in several different locations in several different cities simultaneously. How's that for backup? Okay? Now, in addition to all of this, then you're going to get my tax. By the way, I want to emphasize a couple things here. You track it, we store it. The records will be stored with bank-level security. Your data is very safe and very secure, according to IRS and Canada Revenue Agent standards. You can edit the records and download reports. And for you Canadians, there's a new update for reports where you get some more specificity. You're going to like that. And you'll never have to worry about losing the information. Never. Now, as I said and mentioned, in addition, you get me. You get my tax training on demand and financial training, where you get 24/7 access to 3-minute audio tapes. And we'll teach you how to write off your car expenses. And that includes business mileage, how to write off the equivalent of your kid's child education and weddings, how to deduct up to 100% of your medical expenses, braces, things like that, as a business expense. What's that's worth? How to deduct your fun and entertainment, including season tickets, and bulletproof it from the government. How do you like this? How to double deduct your business equipment. How would you like to write off all the equipment you use in business twice? I'm not kidding, seriously. How to turn your vacations into tax-deductible events. How to create a retirement plan that meets any government plan. How to keep your records bulletproof against an IRS audit, reduce your risk of an IRS audit, and tips on what to do when an IRS agent contacts you. And these are just a few of the over 80 tips that I provide, and we're adding more. With one touch, basically you get the tax tracking system, you get your receipt storage, you get storage on the web, and you get a GPS integrated with a mileage tracker, and you get me with all the tax training, webinars, and all kinds of things, and you get the web fully secure, all in one place. You know, by the way, I want to emphasize something here. How do you recruit, train, and make money? It's 3 steps. You sign up with Taxbot as soon as possible. And by the way, you cannot sign up until 2 o'clock. We were just informed by FHTM you have to wait till at least 2 o'clock. You start saving thousands yourself, because that's what it's doing for me. I can tell you that right now. And you show your recruits and prospects why they can't afford to quit. Just show them the front of how much it's saving you. Believe me, they'll be impressed. You have a choice. You can spend 2 minutes a day complaining about taxes, or 2 minutes a day, reducing them. It's the same 2 minutes. One will cost you aggravation and money, and one will even work, and the other will make you a lot of cash and bring peace of mind. And we have thousands of testimonials on how well this works and how well my information saves a lot of money. You know, we did a company-wide survey in over 9 out of 10 customers. It actually comes out to be 9.2. I don't know how you get that 0.2. We're surprised by how fast the tax deductions piled up, and these same over 9 customers would recommend Taxbot to their friends. Now, my point is, you have two choices. You can procrastinate or you can be successful. You can complain about taxes, you can overpay your taxes, you can worry about an audit, do tedious record keeping, and just have it just not work. Or you can lower your taxes by saving thousands of dollars every year. You can stay audit-proof and have that peace of mind. What's that worth? Of never having to worry about an IRS or Canada Revenue Agent audit again, and easy-to-use record keeping in less than 2 minutes a day. Here are the benefits to the representative. Watch this. Number one, you increase retention, because they'll see exactly what they need to have, and the government's on their side. They'll generate all kinds of deductions, and those will be shown in the front of Taxbot. Incredibly easy documentation, and I mean easy. But you have a business in a box. This is there to support you, will generate a lot of deductions and help you in your business and your representatives. You will spy by saving thousands of dollars in taxes. That's how it's going to help you. It'll take your business more seriously and make your representatives, more importantly, take their business more seriously, which means better retention. Bulletproof your records in case of an audit, more apparent cash flow, because the representatives can't afford to quit. They'll see how much they're saving each month. Help them get support from their spouse, because then they get the deductions too. Spouse can golf, can do entertaining to help bring in more customers, more representatives. Stronger proof that you're in business, not a hobby. This is an important point, by the way. Big technique from the government is to treat network marketing businesses like a hobby and not like a business, because if they're a hobby, then the losses get disallowed. There's a lot of disadvantages to being a hobby. But one of the criteria of being a business is, do you have good tax records? Do you have good tax tracking? Do you have reports? That's one of the major criteria of being a business. So this will give you much stronger proof that you're in business, and will give you customized reports to help you achieve your financial goals and help provide you with even budgeting. You know, FHTM has great products and marketing. This will give you a lot of support to you and your representatives for the business element of it. My point is, get started today. You can start, as I said, starting 2 o'clock Eastern Time by going to your Office Assistant website. The price is only $19.99 a month. And by the way, it's not even $19.99 a month. Why not? Because it's tax deductible. You get that 45% rebate. It's fully deductible. You get 1 full point on your product each month with Taxbot. You know, what other products come with a return on investment like this? I think you're going to find that potentially this will produce at least 10 and could be as much as 20 or 30 times what you pay each month, and just in cash and new deductions. And you could potentially reduce your monthly point purchases to 0, literally, with all the deductions that you're generating. Okay, that's where I want it to be. I'm going to open this up for questions. I brought on our Director of Development, Jake Randall, to help answer any technical questions, how Taxbot may work in various places. I can answer some of the tax questions. If you may want to mute your line. So we'll bring Jake on. Jake, are you on? See if we can bring Jake on.
Yeah, I'm here, Sandy. We can go ahead. Sandy, we've got one question here. How can a husband and wife or a couple use this together in business?
That's a great question. First of all, with Taxbot, both of you can use this. You would be on one report. That's the problem. We will eventually have separate accounts with separate people. But with Taxbot, both of you can log in and generate the deductions, and it will all appear on one report. So that's a very good question. So let's say you're entertaining and then your spouse is going to be entertaining. You can still log on and put that all in one report. Sometimes, give you an idea of how well thought this out. Let's assume you're walking along and first of all with Taxbot, let's assume you get to a spot that your phone isn't working. Something happens. You're in the middle of a mountain. It doesn't work. And then all of a sudden you get to a spot where it does work. Taxbot will actually compute the mileage from where it stopped because you've got no service to where you begin. In many cases, that won't even affect you because the GPS won't even be affected. But if it is, it will still compute what the mileage is. I mean, there's so many cool features with this. We have a whole tutorial on how to use it. We're going to have webinars if you don't want, in addition to help answer questions. There's a lot of things that go in with this. And we've got a lot of things we're going to be developing in the future with Taxbot. I mean, we're going to be putting it in Spanish and French. We're going to be adding several accounts. We're going to be doing all kinds of fun stuff with this.
A couple of other questions. One caller says, is this webinar going to be recorded so that we can get it out to the field? Yes, this will be recorded. I'm going to get this to Brittany so she can post it and send it out to the field so you can use it as well. Another question is what about BlackBerry? That's a good question. BlackBerry is an interesting story. We're looking at options to make BlackBerry feasible. BlackBerry is in a tough spot. Their development toolkit that they give people is not as robust, and so every carrier does a little bit of tweaking to the code to make it so that it fits their needs. So we're looking at options right now. Unfortunately, we don't. Just Android and iPhone and the web. The only thing with the web is that you do not get the GPS tracking, obviously, because your computer doesn't have a GPS in it. But other than that, you can scan receipts and put them in just fine. If you don't have an iPhone, but you still have a phone with a camera on it, you can snap pictures of your receipts, then upload them to your computer, and then upload them to the website as well. And then you just keep track of your mileage with the traditional way, keeping track of your how much you're driving for business. And then put it into your computer later that night.
Yeah, one of the problems with BlackBerry is BlackBerry has a new operating system, and unfortunately they did something very stupid. They didn't make their new operating system necessarily compatible with the old operating system, so we didn't know which one we should program for. That was the problem. But we will eventually, I think, make it available for BlackBerry.
Okay, this question asks, is there any additional setup fees? Actually, no. It's only $19.99 a month, and you sign up for that in your back office, or excuse me, your office assistant website, and you get a full point on it, and it's $19.99 a month. Sandy, sometimes people have some questions about the deducting samples and things like that. Maybe you could shed a little light on when you can deduct product and samples and things like that.
Yeah, that's a very good point. And a lot of times people ask me if, is my monthly purchase of things or points deductible? Generally, monthly purchases, and it depends on who you ask, but generally monthly purchases of most things in order to get a check aren't deductible unless you give them away as a sample. And then you've got to document that correctly. Remember the 6 things: who, where, what, when, why, and how much? If you give it away as a sample, then it becomes deductible. If you personally use it and personally consume it, then it generally isn't deductible according to IRS anyway. But that hasn't been tested in a case, so who knows? But that's the general rule. But that's where Taxbot comes in. If you want to give it away as a sample, like the health product that you have, that's fully deductible.
Again, we're getting some questions about pricing, and it's $19.99 a month. And go to your office assistant website, and you can purchase it now and get started. That's about it for us. Sandy, is there anything else that you want to say before we close up shop?
No, I'm just very excited. I can't tell you. This is going to turbocharge your business. It's going to turbocharge your representative's business, and it's going to. I want you to think about it. You reduce attrition. What's that going to do to your business? I mean, that's what we're talking about here. I mean, I think this is going to be the most amazing thing you've seen in a long time, and there's a reason it took me 10 years to develop this, and you'll find out why.
That's great. Well, thank you all for being here. We look forward to a wonderful partnership with FHTM and to your profitable future.